Picture yourself in 1982 holding a stack of Panera Bread shares, a tiny startup back then. You're watching others chase quick gains while you sit tight, eyes glued to that slow but steady underdog. Now imagine that $10,000 in your pocket morphing into over $1 million. Sounds nuts. That's exactly the kind of story Chris Mayer unpacks in 100 Baggers. How do these freakishly huge wins happen? What secret sauce turns a small stock into a fortune? Let's crack the code. Ever felt impatient staring at your portfolio? Mayer reveals why slow and steady trumps fast and flashy every time. Chris Mayer tells the story of Panera Bread. Investors who bought shares in its early 80s humble startup days and held them through decades didn't see fireworks every day. But over 30 years, that steady growth channeled through patience turned tiny bets into million-dollar jackpots. It wasn't luck. It was the simple power of time multiplied. Imagine compound interest like a snowball rolling down a mountain. At first, it's just a tiny ball of snow gathering dust, but as it cascades, it grows exponentially, gathering momentum and power. The magic that turns $10 into $10,000 isn't sudden, it's consistent accumulation. That's the secret engine behind all 100 baggers. Trading stocks out of boredom or panic is like chopping down your money tree just as it's about to bear fruit. The real jackpot lies in ignoring the noise and holding on through market swings. Mayer's research shows that those who stick around and resist the urge for constant action see the biggest windfalls. Great businesses hide behind strong walls. But what walls keep 100 baggers safe from competitors and crashes? Mayer dives into Costco's story, a retailer nobody thought could outlast giants like Walmart. Yet Costco built a fortress of loyal customers thanks to its membership model. That recurring revenue created a moat so wide competitors couldn't just stroll in and steal customers. This fortress kept profits high and steady, a prime 100-bagger ingredient. Think of a moat like the walls around a medieval castle. It's no use if it's just a ditch. It has to be deep, wide, and filled with alligators. For companies, this moat means brand loyalty, patents, or unique scale that keeps competitors trapped outside while profits flow inside. When you find companies making recurring revenue, like subscription models or memberships, you're tapping into a steady river of cash that cushions against market storms. These businesses don't have to hustle for every sale. They have a built-in, reliable cash drain that funds future growth and keeps them on track for those 100x returns. You don't need a crystal ball to find 100 baggers. Mayer shows you how to spot them before the crowd wakes up. Chris Mayer tells stories of companies Wall Street slept on, small firms quietly growing profits every quarter. Investors obsessed with headlines often miss these gems. For example, he highlights how investors who hunted beyond the obvious giants found massive returns by ignoring analyst hype and focusing on fundamentals. Hunting for 100 baggers is like prospecting for gold nuggets in a river. You sift through tons of stones, big flashy stocks, and find shiny little ones, small firms with steady earnings. Consistent profits, even if small, signal a hidden treasure waiting to explode once the market finally notices. Low debt means a company isn't weighed down by interest payments, letting it reinvest profits back into growth like fuel. Mayer warns that loads of debt are like extra ballast on a rocket, slowing it down just before liftoff. The cleanest, debt-light companies can shoot up faster and higher. Remember that scene with Panera Bread? That quiet early bet was no fluke, it's a mindset you can adopt today. 100 baggers aren't unicorns reserved for the lucky or the elite, they're patterns anyone can learn. So try this, pick one solid company with a strong moat, low debt, and hold it tight for at least a decade. Let your snowball roll. Subscribe for more book summaries like this one.